What's up, everybody? Thanks for joining Decentralizing today and watching our show with us. We're just going to kind of review like the futures positions. I was just showing Aaron
how to do it. And
yeah,
like
it was
what
just kind of
it all means.
It was a teachable moment, and anyway, so we just thought we would bring you in on our little teachable moment and see if this helps provide some value to you in your life. And before I provide you that hypothetical value, I would enjoy it if you would just smash the like button, subscribe to the channel, and share your comments as you watch the video below. If you have any questions or if you have tips on how to do this better, share that with us. I also want to quickly say this is an educational video, so it's not for financial. I'm not telling you what to do. It's not financial advice. I'm not licensed to do that, and this is not what I'm doing. It's really just sharing what we're doing and how it works, kind of. So, all right. With that said, yeah. With that said, I'm gonna hop to it. So, one thing I was just saying to Aaron that I was remarking on, and of course it has evaporated now. Oh no, it went back there. Is this U.S. dollar spread? If you guys can see that here, I was just remarking because look, I didn't get into my Coinbase Pro account for like over a year, and I wasn't really trading on advanced mode since last bull run. They used to call Coinbase Advanced Coinbase Pro, and it didn't have futures markets in it, which is this part right here. It just had spot markets back then. The futures markets are something they're rolling out right now as a beta feature, and I actually don't think everybody can utilize it, and you have to meet certain conditions to apply for it. But what I do want to talk about is that this spread is like much lower than what I remember it being back in other bull markets. The thing about Bitcoin is that it was so volatile and the liquidity was so thin on Coinbase as an exchange that spread is sort of a way to understand how much liquidity you have. Okay. So on one side, right, like the green side here on the bottom, that's where we have everybody putting their bids in. That they want to buy, okay? And then everybody up here, they're putting in all of their asks. An ask means like a sell order. So you got your bids and your asks, and they're competing, and TradFi uses the same terminology, bid and ask.
Okay.
It means buying and selling.
Because they got to make it more.
Yeah, and so why do I like Coinbase? Exactly, there's always got to be a new language in any given field
to make it specialized.
Confuse and specialize and all that. But
bid and ask.
Bid and ask and spread. Okay, so usually a lot of exchanges will trade. They'll charge some sort of a difference on the spread, or like a premium on the spread, or they'll charge some sort of a per transaction fee each time you trade. That's a percentage, and so on and so forth. And some exchanges will decrease what's required for what that fee, like they'll make the fees go down if you hold their native coin. Like if you're holding more on Binance, it would be like BUSD. On Nexo, if you were holding more Nexo tokens, then they would be like, okay, we're going to hook you up with much lower trading fees and more favorable terms, because of course they're trying to encourage that you buy within their ecosystem, and they're trying to get you to hold liquidity there, really. So with like Binance Coin, for example, the idea there is like they wanted that to be a liquidity token that would be easy to exchange between all the various assets they're listing there. That's kind of the idea behind that.
Do they also do what banks do and use that money to like buy stuff? Like, because essentially that's what banks do with your money too.
If they're FTX.
Oh.
Yeah. And then that's what we call counterparty risk, right? And fractional reserve banking. The idea being like when you go and you give, what Aaron's alluding to is you go to the bank and you put in a $500 account and a deposit, and you come back later and you're like, I want my $500 back. And they don't have that $500 theoretically, because they're going to take all your money, and they're regulated and authorized by the government and allowed to go out there because they have banking license, and they can relend that money. So they take your money and they rehypothecate it. They put it somewhere else. They don't have custody of it anymore, okay? So your dollars aren't real. They're all like virtual. And then
the banks just kind of talk to each other and loan like mini loans.
Then they build a leverage system on it. Okay, so they like take your $500 and then they lend it out to someone else, and they turn it into $1,000 or $1,500 or $2,000. What's wrong?
I forgot I have an appointment in a few minutes.
Oh, you got to run?
Not yet.
Okay.
I have like 10 more minutes.
Okay. She always like puts me under time pressure. Hurry up, Nate.
I'm sorry.
Cool. I do need to deliver though, because I'll pontificate forever. I've already gone on how many tangents, so we're talking about liquidity now.
Okay.
But on the spot market, what impresses me is the spread. what I would speculate on it is I'd say that because of ETF flows now, we have ETFs and they're just like this constant source of liquidity, and Coinbase Advanced is their pro version for institutional trading and for advanced or whatever investors, whatever terminology they like to use for people who have the money. What is it called? Accredited investors and so forth. So the advantage trading here is you get to trade at cheaper fees and in higher volumes. And no doubt, this is how their ETF flows are probably flowing through this somewhere.
Yeah.
I'm speculating that they are, and that's why we have so much liquidity now. The amount of Bitcoin USD that's being held in this pair is got to be huge, because look at that. It's crazy that they're keeping, it jumps around, right? If somebody buys a big old order. Okay, so how does like placing orders work, right?
Yeah.
Well, when you buy, you can do a limit order, which is what I just did. A few minutes ago, I put a limit order in, and what that says is it says, well, I want to buy it at the bid, which is basically the lowest of the bid asking prices, whatever the one is that's the very lowest, it's going to set it to that. And then, right here, I think.
Okay.
And then if you do mid, I think that's just saying whatever right here is,
yeah.
like in between these two.
Okay.
And if you do minus 1%, basically, it's going to set this number to 1% less than whatever the current agreed upon midpoint is, I'm thinking. Mm-hmm. And you could even do 5% lower. Okay, so let's say I wanted to do a hypothetical order, right? I could say bid. I'll just do one to like show you how it works. I'll say bid. And I can't read this, so I'm going to say 25% of what I currently have. How much is that?
0.007.
I want to keep enough of my margin account and make that a little bit smaller. I'm so blind. 0.00. Let's do 0.003. Just want to make sure I'm hedged enough and I'm going to take more money out for the margin account if there's a big dump. Okay, so if we did 0.003 Bitcoin, 3/1000ths of a Bitcoin, that's about $200. Okay, so we'll do that order. But this is saying what's the price I'm willing to pay. Well, I'm going to say the price I'm willing to pay is 1% less than the current market, which is like 66,200.
Which it's just going up. I'm
which
watching
is like
it.
right here.
It's gone up $300 since we started this. So
yeah, odds aren't in my favor that this is going to get executed. And I can specify a time frame, by the way. That's what this good till canceled means. I can say like what's the time frame that this number and this order that I'm specifying is good for. So what I'll do instead is I would like set this to, if I'm realistic, I just set it at bid, because especially for moving fast and I want to like just catch it, then I just hit bid. And usually you're still going to pay less here. Oh, and then what's the difference between post and taker? Allow taker. Well, basically allow taker, I don't remember how it works now, but how it worked back in the days, it's basically the same as a market order. So why would you do a market order? Because they charge you more fees. The post orders usually are less fees. And I can't prove that, but that's how it used to be, so it's probably still that way, and I'm assuming that. Yeah. But it basically means don't take the order no matter what unless they get my price, kind of thing.
Got it.
If I recall. And yeah, again, if you guys know exactly what that means and give me the right terminology on that and give correct educational facts, I would appreciate that in the comments. So, yeah, let's go ahead and just execute it. We'll say buy Bitcoin. Let's see what happens.
Success.
Well, success in placing the order.
Yes, I know.
Now,
But
did
it
the
says
order
open.
actually get filled?
No.
It says open. So we can come back and check on this in a minute. But in the meanwhile, since you got to run, let's go to futures real quick. I just want to update everybody on what I did in futures recently. So you can see, actually, portfolio would be where I want to go. You can see here that I made some changes. Like last video, you guys might remember that we saw a pump from like 62 to 65K, and I closed the Bitcoin. And did I have a Dogecoin one open too? I don't remember. I think it was just Bitcoin futures the first time. So I closed the Bitcoin futures and took that. And then I set up like one of each on Bitcoin, Doge, and ETH. I set the stops, like honestly, pretty only a couple percent below where it was trading at the time. And so I got stopped out. You know what I mean, quite easily, which is okay. It means you lose a little bit of money, but I'm still in profit, bottom line, by quite a bit. I think I lost like $40, but we were like $200 in profit. So what I did today is I went and I was like, okay, I put another like $2,500 into that account. And of that $2,500, what I ended up buying were these positions here. So I already had the ETH one, but I already had the Doge one. but what I did buy, because I reestablished these after I got stopped out. Like I waited a little bit and then it went to a good place on where the wick was last night, and I think it was last night I bought them. But I bought these Bitcoin ones today. 10, like I added. I think we had 3 or 2, and I added like 7 or something is what I did with some money. And so you'll see here that it'll tell you average entry, and that's taking into account that some of those other contracts were entered in at like slightly lower value than where we're at now. I think it's 65.9 or something.
So, explain to me what this means by future. This one, you're just waiting for it to get to a certain future price, and then it'll either buy it or it just sells.
Everybody's gambling on a future price.
Oh, gambling. Okay, so this is just betting what the price will be.
And that date right there, right here.
Oh, okay, now I see.
Expiry date of
you're saying by the 31st
of May of 24. The agreed upon market consensus right now in this moment in time is that it's that Bitcoin is gonna be $67,270 at the end of the month.
And you're betting it's gonna be higher, I'm assuming.
Yeah, or I would be short.
Okay.
But instead I'm long, which means I'm betting.
No, I mean I'm just wondering how high you're betting it is.
Let me quickly show you how to set up. Whoops. Close
never mind.
positions.
No, just say never mind.
I don't even know what I'm clicking on here.
Well, no. Don't do it.
I want to show you guys how I'm going to establish. So let's go to orders real quick here. And let's just see if orders are still buy, sell, open, active, active, active. Okay, I'm going to show you something cool. Because these have stop losses in them. Mm-hmm. But like, what are they for? This is the Doge one. This is the ETH one.
And that's the Bitcoin one.
I'm going to close the Bitcoin one, actually, because I want to redo the stop losses for Bitcoin. So I'm going to take this one, and I'm going to cancel it. And then I'm also going to take this open order that we just did to buy more Bitcoin, and I'm going to go ahead and cancel it. Just because I want to make sure I keep enough in that reserve account. I'm just doing that mainly for an example. There we go, cancel order. Okay, now let's go back here to futures, and I'll show you how to do a stop limit loss. So is this the Bitcoin market? Yes, it is. So we'll go to stop limit. And what we want to do is we want to choose a level where we think, like if Bitcoin goes below that, we want out. Because it might be on a cascading short-term down move, right?
You don't want to like have one of those little volatile drops.
Yeah, and how am I going to determine that? Well, to me, it looks like how much do I want to limit my losses? Well, really, what I was kind of gambling on, like, here's what I looked at. Let me show you the spot chart on Bitcoin USD. And I believe this is a pretty long time frame of a day. So if I go all the way here, this is the last peak in 2021. Mm-hmm. And this has been like what we've been fighting, is this long-term kind of right here area. Okay, so you can see we're finding some support off of like right here.
Yeah.
We're bouncing there. So those are some areas. And also, of course, I'm sure there's a lot more of this support like this that's been established more recently. But what I'm gambling on is that, let's say like we fall below maybe mirror. Let's think. 66,560. Mm-hmm. Yeah, that might kind of signify to me that this is not, or actually I don't know. I might even set it like here. Because I don't mind losing just a little bit, because I'm kind of gambling on a big pump though. And if I'm wrong, I don't care if I get stopped out and lose a little bit. Better to lose like 2% and then gain 20% on a pump than to lose who knows how much. So let's set these at how much? 66 or 67,000. I'm gonna say like 66,800, maybe like right here.
That's 66.9.
So just right below that.
Right there.
Yeah, usually just right below it. Yeah, 66,840. So we'll do this. We'll just say 66,840. Then we're gonna do it here too. Amount. This is how many contracts. Wait. Oh shoot! I'm in the spot market again. Let's go back to futures. Okay, but we still got the number, which is what we wanted. So for stop limit, we're gonna do 66,840. We'll say 66,840. And the amount, that's how many of our contracts do we want? Well, we own 10, so I'm gonna do 10 of these. And what happens is you see that, why does that cost so much? Oh, I'm on buy long. Dang it. Okay.
You're having a hard time with this.
Okay. I got it now. Still sell short. 66, 840, 10 of them. Here we go. Okay, that what keyed me in on a problem was these numbers right here. I was like, wait, why is that $1,000? Okay, because they still had that other buy order in or something.
Yeah.
There must have been something else in there, or it was interpreting it that way. Okay, so this is how you want to be on the sell short. Okay, which is counterintuitive because you're like, sell now? No, you're not actually selling now. You're actually putting the order in. What the order says is, if the price gets to the stop price, then you're gonna basically execute whatever that limit price is, as long as you're back below it.
Yeah.
Like as long as you're staying right below it and you've hit that threshold. So sometimes you'll set a stop at like $100 below the actual limit price where it sells or something. I don't know. I've seen that strategy. I don't know a lot about that, guys. So again, if you want to share, I just know it's a good idea. You do want to like set these stop losses. So I'm gonna go ahead and say sell. No, why does it still say $433?
But I have to go.
Okay.
But thank you for the teaching
Yeah. No problem.
I'm sorry. I forgot about that. I have
problem.
to go. Oh, I'm so sorry.
Does it have me buying something else in this order?
I don't know.
I think it does. I'm gonna go look over here. Cancel this.
See you in a little bit.
I'll see ya.
Sleeping.
Okay. Sounds good. I love you. So if I go here, I'm gonna refresh my screen. Something doesn't seem right. Because usually that price is almost nothing. So if I go sell short, stop limit at 66,800. I'm going to do 10 of them. Whoa. Oh. Well, oh, I get it, but I don't. You have authorized Coinbase to trade, transfer excess funds for notional value, contract multiplier. Leverage of 3. 429.13. I must be doing something that I'm not thinking about correctly here. Is it because I'm already in profit at that point? Or is it just saying that's how much money I'd get back? Like, I'm not very clear on that. Sell short. Well, it says it's an estimate, so I guess you don't actually pay these unless that price gets reached. So let's think about it. If price draws down to 66,800 and these sell orders go in, how is it costing me $432? Is what I'm trying to figure out. Are they saying because that's how much money I would lose? Like, margin required? The amount of funds before fees that must be available in your account to place an order based on your current market price. Orders that do not increase exposure will not have any additional requirements. Every time I've done this, it was like $0. So this makes no sense to me. Why it suddenly costs $432, it's telling me. If I do one of these, see, 34 cents. Okay, if I do two of these, 67 cents. If I do three of these, a dollar. 4, 5, 6, 7, 8, 9, 10. What the? Why does it jump up to 433? Dude, I do not get that. I'm gonna set 9 of them because that would be the intelligent thing to do. Whoa, the number just jumped again. Huh? Am I crazy? Or was it doing it all along and I was just missing it? I wasn't looking at the right number. No, I was, because look at total estimate. What the crud? That's not me. I don't think that's me, guys. It's not on me. Okay. Not on me. Okay, I created 8 of them there. It's in beta, so Coinbase, if you're listening, my friends. Yeah, a little buggarooski right here, perhaps. Let's try just 2. Yeah, dude, what is... Or maybe not. Maybe intended functionality and Nate doesn't get it. If you get it, please put it in the comments. Let me know what's going on, guys. Why are the last 2 contracts going to cost me that much? And why is it that sometimes it does and sometimes it doesn't? Oh, well. I'm willing to lose those. I don't need stop limits on those ones. They can just disappear forever. Guys, thanks for watching the channel today. Like and subscribe, and catch you next time. Have a great weekend. I might be dropping over the weekend too, so yeah. If you like the content, I'm thinking about adding a feature where I set it up so that you can have like a live chat with me once a week. People who are going to pay for a premium service would have that ability. And during that time, you could really just use me as a consultant, really in any like crypto, blockchain, Bitcoin capacity that you have. So if you're working on a project that you're developing, or you just want to discuss tokenomics, smart contract development, blockchain security, NFTs, my thoughts on the market, anything like that, and macro in general. Like I'm happy to spend that time and do that because I think it would be a valuable service that I would like provided to me as like an experienced person in the industry that just holds a live stream once a week for premium members where we can just kind of like pick their brain as much as we want, or maybe even longer than an hour. We'll kind of see how it goes because I want to make sure everybody gets enough value, like you show up and you actually get something from it. I wouldn't want it to be the case where people showed up and they never got any kind of one-on-one time or like questions they have or ideas that they want to talk about with me, put to the back burner. I want to make sure that you get that value if you paid for that service. So anyway, what do you guys think about that idea? Let me know. All right, have a good one.